Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, July 17th, 2009. Well, today we're seeing the markets basically trading sideways. You have the Dow, S&P, and NASDAQ all trading about a point or two to the downside. To be exact, the Dow's down 2 points, NASDAQ's down 5, and the S&P 500 down about 3 on the day. Now, what you are seeing right here on the charts is very, very key because there's some trend lines on these charts you have to be very, very watchful of. I'm going to discuss those in a couple seconds here, but first I want to just touch on what we saw this morning, what we saw yesterday after the bell on Google's earnings. Again, we saw the Google earnings coming out not nearly as good as the market had hoped for, as really the market right now is in this mode where everyone has to blow them away. If you don't blow them away, you're going to be coming in. That stock price is going to be coming in, and you can see Google here down about $15 on the day from the close up here after hitting a double top on the daily chart, but a close nonetheless up here in this range yesterday, and then it's trading down here about $15 lower today, right into some solid support at 425 to 427 on the chart. All right, then we looked at IBM. IBM earnings yesterday, actually very, very solid, coming in nicely with the stock now today up $3.52. Very, very good earnings, although a lot of their earnings were due to cost cutting. That does worry me, folks. A lot of these last couple quarters, the reason why these companies are able to do so well is because they're cutting jobs, they're cutting costs, really cutting back. That's boosting earnings, but it's not boosting the revenue side of the actual, kind of the bottom line. I guess that's what you're saying. You want to see the growth in sales really, surging, and that's not necessarily why these companies are beating. Again, that does worry me long term in this market. This morning we had GE, Bank of America, and Citigroup. Citigroup today is flat on the day, although it did gap up. The earnings came in very, very nicely, but it was because of a one-time gain mostly. Other than that, the revenues and earnings were pretty much in line. The stock gapped up higher today to about 318, but now it's come all the way back down. It's actually down 1 penny at the lows of the day right now. In addition, Bank of America earnings, not that spectacular either, although it did really, after gapping here, sell off, then rally to the highs of the day from yesterday right up here, but then ultimately has sold off very, very hard, and now is trading kind of in a bearish pattern here, possibly bearish pattern for another drop later today. So we'll see how that goes. It's just down 30 cents. Very, very minor move on those to the downside on earnings. Just really not that same momentum you might have seen from Goldman and JP Morgan. JP Morgan, though, let's just touch on that, is really bucking the trend today. Most of the financials are a little weaker after such a run for this week, but JP Morgan's actually up 52 cents today again, off the highs, obviously. It was up $1, but that has come in pretty nicely as well, but it's still up 52 cents. It's a nice gain on JP Morgan as it continues to gain off those earnings from yesterday morning. And now the last but not least was General Electric, folks. General Electric, not pretty earnings. They actually missed on their revenue numbers, and you can see here the stock trading all the way down today, 76 cents lower to $11.64. So a good sell-off on GE, and again, not surprising to see that, folks, as I've been warning and I've been talking about it to the premium subscribers in the Research Center, which, by the way, everyone should be joining to get the premium guidance that we've been able to give, that these numbers are coming out great, but a lot has to do with cost cutting. And again, as I said earlier in this video, that is a worry to me, very much so. All right, next, guys, let's talk a little bit about the spiders. Let's go back to what this market is doing right now. The big thing I can tell you about this chart, and you're looking at the 10-minute intraday SPY, which mirrors the S&P 500, is that the market is holding this blue trend line. Look at this blue trend line, and it's holding it so beautifully. Look at where it comes from. This is from Wednesday, the gap up on Wednesday. We had a big up day on Wednesday. Take that low, connect it to the lows from Thursday right there, and then connect it all the way through. As you can see, it comes right through, and there's the lows. And you keep on hitting this blue line and bouncing off, touching it again, and now you're getting a little bit up. So you have to watch that. That's going to be a key thing. And look at this market starting to get a bit off this blue line. This blue line will not break right now, and follow it for the rest of the day. And if we close above it, follow it on Monday for possibly a key level to watch for a possible breakdown in this market. Very, very important. Now, by the way, folks, I just want to announce there is a major call that we've been releasing in the last couple of videos and in the coming videos. Obviously, I'll discuss it today in the Research Center for premium subscribers. You have to be ready for this call, all right? Very, very major in regards to what this market's going to do. And again, I'm not going to tell you what it's going to do. This is for premium subscribers, but it's very likely you're going to see a major move in the market coming here in the very near term, and you need to be ready to take advantage of it either way, as a longer-term investor, swing trader, or even as a day trader. So do sign up for that Research Center this afternoon to get those calls over the weekend. Again, the Pro Trader watch list, we're posting calls bullish or bearish. You get getting picks out of that. The hot charts and alerts has been on fire, folks. We nailed oil at the lows. Oil is surging. We put out the buy on that in the Pro Trader watch list and the hot charts and alerts when the USO was trading down here at the lows below 32. It's now over 34.50. Again, major move there. And these are all going out to the premium subscribers, so I do encourage you to take advantage of it and sign up. Nonetheless, we'll go back to the spiders. Blue line is major, guys. Blue line is very major. If you start to move higher, watch for the highs of the day right up here. You're going to see a good little level at 94.15 as resistance. If you get through that, you're going to then look for the highs from yesterday, which would be right around 94.50. Those are your main levels to watch for the rest of the day on the upside as resistance. And again, definitely in the light volume. Today's an extremely light volume day. In fact, today could be the lightest volume day of the year. I have to just make that mention because usually on options expiration Friday, you see a little pickup in volume early in the day, but today it's just absolutely dead. I mean, unbelievably dead how low this volume is today. And whenever volume's low, you sometimes look to the upside in charts. Charts have a high likelihood of moving slightly higher. You have a general upside bias when there's no volume in the market, especially on a Friday afternoon when all traders have left already for the Hamptons or to go out to their summer homes on the Jersey Shore, something like that. Very possible just to see a floating higher in the late afternoon session. So watch that. You can see it starting to happen here. It's been holding this blue line. You can see it floating up above this, following this blue line up as well. All right, downside support, as I mentioned, blue line being key here, and you can see how key that has been. Below that, you have the 50 moving average. That will be a level as well to watch. That's at 93.75 right now. Below that, you'd have this pivot low right down here at 93.60, and then the lows of the day at 93.50. Those are levels. So there's a lot of support in this general area below. If you were, however, to take out 93.50, you could actually fall all the way down to this pivot right here. Let me put it in. And that would be at 93.35, and then if you broke that, then you're most likely going to 93 even number. Those are your levels on the downside, and again, you have to understand how to read these charts. These charts will tell you which direction. There's no, it's not surprising that I happen to put in this blue line, and this market happens to bounce off it all day long, and now break up towards the high of resistance right up here. That's because these things work, guys. I don't talk about it because it doesn't work. I talk about it because it works beautifully. 80 to 90% success rate is fantastic. You're not going to find a better method out there, in our opinion. That's how we feel. So I do hope you guys come and join us. Again, watch these levels on this slow Friday afternoon. Market's still remaining basically flat, although you have seen the Dow tick to the upside now. The Dow is now up 15 points, and the S&P 500 is only down 1 point with the NASDAQ. So a nice little tick up here in the markets. The futures have gone positive as well. Just no volume in this market that favors the upside. We'll continue to watch the rest of the day. Join the chat room, the research center, the next webinar, all good stuff. We'll talk to you then. Take care.